Hey, what's going on guys? Welcome back to another video. My name is Henry and today I want to talk about my portfolio, my plans for 2022, and what I'm going to be trading in August. I want to walk through every single position that I have right now, all of the positions that I've been opening in Discord because they've been very profitable. So I want to run these trades by you and give you some ideas for you to trade coming into August. All right, so specifically a few stocks that I'm trading and I'm absolutely in love with because we've been making money every single week on is American Airlines. American Airlines is at the point where I think that it is a very good value. This stock used to trade around $20 per share, and since it has gone down to $13.68. It hasn't really traded at $13.68 since about November 22 of 2020. So it's about 2 years in, and now this stock has reached points where it hasn't really been for the past 2 years. This is a very strong indicator for me because this means that the stock is going for a discount. Now, what I want to do, since the stock is at a 52-week low, and actually it's pretty much at a 100-week low because it's not been here for about 2 years, what I'm specifically looking at is selling the 13 strike put. Now, selling this 13 strike put just means that this stock can't go below 13. If it does, that's fine. You can get 100 shares of the stock and then start running the wheel strategy, which is basically once you get 100 shares, then you can start selling covered call options. Now, for American Airlines at the 13 put, there's actually a lot of premium. So if you sell the 13 put on a weekly basis, you're going to be collecting about 1 to 1.5% per week. I've been doing this for a number of weeks now. We've sold a 13.5 put actually last week, and then American Airlines ended up ending at $13.68. So we were really close, but we ended up eating that lobster dinner because it ended up staying above $13.50. Now I moved down to 13. I think if you're watching this now or in the future, selling the 13 strike or the 12.5 strike even for a week or 2 weeks out is a super safe strategy. It's the best way for a small portfolio to collect premium and income, and I think you can do this on a consistent basis. Now, the next ETF that I have is XLY. So I'll explain to you why I have so much XLY, because if you do the math, I sold the 141 puts and I did 20 contracts, which is a 280 grand position. Now, the reason why I'm going for XLY is actually if I click into XLY, you'll pretty much see the type of holdings that XLY has. And specifically, this is a consumer discretionary ETF. So when I go into this ETF, you're going to see the top 10 holdings. And basically for all top 10 holdings, I'm a really big fan of it. Here's the top 10 holdings. They account for about 72.62% of the total assets. Now, for me, I really like Amazon and I love Tesla, right? But for me, I did end up selling Tesla stock. I wasn't sure if the stock was going to go down further or go up, and for me it was a little bit too much risk because I owe taxes and I am looking to purchase a rental property or real estate. So for me, having a lot of Tesla stock is really risky, so I wanted to diversify my assets a little bit more, so I ended up selling Tesla stock. However, XLY is a really good replacement for me, so I replaced Tesla stock with XLY because it's basically 20% Tesla. So for me, I'm about 280k in puts on this ETF, and that actually means that I'm about $56,000 because 20% of that is about $56,000 in Tesla stock itself. So I'm selling puts here, and so far I am up about $2,840 on the day here in this position. But as we saw before, I was up a lot more on this position. I'll go back in just a second. But Amazon, Tesla, Home Depot, McDonald's, Nike, Lowe's, Starbucks, these are all companies I like. TJX I don't follow as much, but Bookings I like, and Target I like. So literally all the stock holdings within XLY, this ETF, are amazing. And actually confirmed, I am up $2,500 on XLY. The next stock I'm selling puts on, and by the way guys, when I'm selling puts, if you have a small portfolio, you can just do something called a put credit spread, make your collateral much less than needing, $8,500. Basically what that looks like, I'll just show you in a couple minutes, but let me just talk about Airbnb. The reason why I actually found Airbnb is because I was watching a YouTube video, and I also noticed on OptionFi's website, Airbnb was screening for 6 different strategies. So this website basically shows you 8 different strategies. I think it is buy call, sell call, covered call, right? Debit put spread, and put credit spread. There's a whole lot of different strategies, 8 to be specific, and 6 were literally screening for Airbnb. So I'm like, really interesting, because my buddy's working on this website. That's why I am helping him out with it. And I was taking a look at it. I'm like, this actually looks really interesting. It is super bullish on Airbnb. So I ended up selling 81 puts just to be super safe. I picked the safest strategy. It recommended a few. I really wish I went with the riskier strategy. I would have made so much more money, but I sold the 81 put. That ended up doing really well. And now I'm selling 85 puts because I think Airbnb is a steal under $90 based on the research I've done and based off of what options OptionFi is recommending, I think Airbnb is a really good play. In fact, today what I'm going to be doing, because it's Monday and I'm doing my coaching, I'm going to sell a lot more Airbnb spreads most likely. I may even buy a call debit spread, but Airbnb is one of my very favorite stocks right now, along with Oatly. So I ended up selling $4 puts on Oatly. That's because I want to get into Oatly. I want to get in for about $4 per share. I did collect some premium here, so my average cost is going to be lower, but I am a big fan of Oatly. I've done a lot of research into this stock, and basically I think the milk substitute industry is going to do really well. I think that if you look at oat milk as a whole, it's really growing and taking market share away from soy milk and from almond milk and from other categories that are milk substitutes. So for me, I really like the industry as a whole. And when I look at Oatly, I think they have a really good brand. So just taking a look at the marketing, I really like it. And honestly, I've tried Oatly a few times. I was a fan. And then what I also like about Oatly is they have a relationship with Starbucks. And the reason why I don't think that relationship can go away is because Howard Schultz, the CEO, or I think he's actually the former CEO of Starbucks. He's the co-founder, right? He founded Starbucks. He's actually invested in Oatly. So regardless what happens with Oatly or Starbucks, they're going to stay in a partnership together because Howard Schultz is invested and he has all the incentive in the world to make Oatly successful, because that means that he's going to be successful. So he has a motive for this company to succeed. Now also I looked at the research and Oatly actually froths better. I can't really pronounce that, but they froth better. So when you're making your coffee, when you put Oatly in there and you're making a cappuccino, it's going to be more frothy than like soy milk or almond milk. So that is a really big bonus for customers as well. So I have sold $4 puts on Oatly. I've also sold $3 puts on Oatly as well, but I guess that they just expired because I don't see them in my account. So that ended up, oh no, there they are right there, sorry. About $15, and I have sold 10 contracts. So I am betting kind of hard on Oatly, and this is a very small account friendly trade. I think that being in Oatly is, you know, good for even an account that is $500 or $1,000. This way you can sell a put option. And even if you have a bare bones $1,000 account, right? You are just trying to grow it and scale it, and you're starting from the very beginning, you're a complete beginner, then awesome. And even if you have a medium portfolio, still awesome, because Oatly is a very, very small position that you can enter because it's basically only $300. That's why I like it so much. It's very versatile for my students in my Discord because, you know, obviously I'm working with beginners, but also intermediate traders, and we can all basically trade Oatly options, which makes it really, really nice. Now, the next thing that I'm doing, and I'm not going to recommend this for you guys because I do want you to coach with me before you do this, but I am using margin. That is how I actually became pretty wealthy. It's not just from trading options, but it's actually trading options on some leverage. So back in 2020 and 2021, I was making really good money. Specifically in 2021, I made $591,840 or something like that. It was $591,800 something dollars. And during the year, I was using a lot of margin. And what margin means, there's a very specific way of using it. You don't want to just throw margin out there because you're going to lose your shirt, and I totally don't recommend it if you're a beginner. But when someone has gone through my material inside my Discord community, they watch my YouTube videos, and I'm coaching with them, and I understand their situation, I'm going to recommend margin. And that's because if you use margin safely, it's basically free money. So what I'm doing is I'm selling puts on SPY, 392 put strike price, right? I sold 20 contracts, which is about 800K right there. And if you do the math over here, if you add all my SPY and my Apple shares, you can actually see that my portfolio is about $2 million. So I'm actually borrowing about 500K. So it's obviously a really huge amount that I'm borrowing, and that is actually about 33% or so. Actually, it's 600K, so it's closer to about 40%. So I'm 40% leveraged, and I'm selling puts, and as you can see, I'm up $20,300. So I'm up a whole lot of money on SPY puts, and basically I am very bullish on this type of strategy because I'm making sure to pick a strike price and a very low delta, meaning that I'm safe, right? Meaning that it is very unlikely for SPY to fall. In fact, this is actually a position that did fall down during this really bad time, and I actually did the math, and I'm still up on SPY as a whole selling put options in like one of the toughest times in a bear market. So currently I'm up $20,000, and for me, I sell puts on margin, and I do so safely by picking low delta strike prices, by picking strike prices that are way out of the money. Hopefully they are around the support of the stock, and I also like to stick to ETFs like SPY and XLY because even if the worst happens, these ETFs are going to be a lot more stable than a single stock. Like if we look at other companies like DocuSign or Zoom, or I mean even Bitcoin or whatever, there's a whole lot of different names. Let me just type in Snow right now. I'm going to show you what would happen even if you sold an out of the money put option on Snow. I am pretty sure that this company fell down like near, let's see, years to date, probably over 50%. Yep, so it went from 280 to 142. That is not a safe way to sell puts. There is no way to really make money off of selling puts on stocks that have very high price to sales ratios, price to earnings ratios, companies that are way more expensive than they need to be. So for me, I would never do that. And in fact, we actually sold call credit spreads. Now, call credit spread, see if I have any in my portfolio. Currently, I don't, but a call credit spread is where I'm basically betting that the market isn't going to rise a lot. It can rise a little bit, it can go sideways, but with a call credit spread, which I have tons of videos on, just watch my small account playlist. You're gonna learn all the different strategies, all the spreads, iron condors. You're gonna learn everything that you need in my small account playlist, which is right here on YouTube. So if you watch all those videos, you'll see that a call credit spread, basically, I love that strategy a lot. I currently had some, but I think they expired on Friday and today's Monday. So I'm gonna open up some more of these on stocks that I think that are expensive, because call credit spread benefits when a stock doesn't skyrocket into the moon, which is probably not gonna happen too often. And I end up being successful about 95% of the time. So selling puts on SPY has been extraordinary. And basically I'm being really safe right now, because if we look at the market, there's a whole lot of problems. Like inflation is going way out of control in US, right? It's like sky high in terms of like the past decade. It's over 8%, but to be honest, it's probably higher than that. I think they're underreporting these numbers. I can definitely see that certain things are just so expensive. I feel like inflation is probably 10% or higher, especially on like important things like real estate prices. I mean, sure, like, you know, food is up maybe, I don't know, 8% or 10%. But if you look at fuel prices, those things are up like 60%. If you look at real estate, it has become super unaffordable in so many major cities. So I think inflation is much higher. But anyways, I think that the Fed is going to combat inflation by increasing interest rates, which is going to hurt money supply. It's going to hurt money supply because as interest rates go higher, it's more expensive to borrow. Less people are going to borrow, which means there's going to be less investment in the economy, and the economy is not going to grow as fast. So I think we're going to see some issues and problems in the economy. I think we're going to have a very bumpy ride, and I'm kind of positioning myself to brace for impact. I mean, if we go lower, then I'm going to, you know, try to protect myself. And I've done extremely well during this bear market. Although it's been really painful for most investors, I think my Discord community is doing just fine. I see tons of people putting up that lobster emoji because we're still eating that lobster. We're doing fine by selling options that are out of the money. Specifically, you can tell that I'm doing this on SPY, but also, you know, I'm invested in quality companies. I don't have the really risky stocks right now, like, which by the way, you should just take a look at my watch list and put some of these down. These are some of my favorite stocks that I'm following. So I don't have Disney, although I'm not against Disney, but Nvidia is decent, but it hasn't had the best performance. I do like Google, especially after the split. I've been a big fan of it. Going into the split, I have avoided Meta. Tesla is the only stock that I feel like I really did get wrong in some ways. I have to admit that. I made tons of money in the past, but I have missed out on this recent swing higher. But one of my students, Eric, made $20,000 by buying call options, and he's part of my community. He's part of my coaching, and he did amazing. I'm like super proud of him. He actually ended up doing better than me by making that call. So really amazing for him. Congrats, Eric. But yeah, so Tesla, I missed out on some of the gains, and at $826, I'm not sure. I'm still gonna sit out and just wait and see what happens. I do like this company, obviously, but I'm gonna keep waiting and seeing what happens. And while I wait, I'm gonna have XLY. I have put credit spreads right here, which are up $340. And I also have puts, which you guys saw before, at $2,500. So going down, I have made some money on Shopify. We have sold Shopify puts for 2 or 3 weeks now, but Shopify has rocketed up to $37. I would like to buy Shopify at a flat price of $30. So right now I'm gonna keep sitting out, but you know, we've made money for the past 2 weeks, but this week I probably won't play Shopify. Hims, I have told everyone to buy Hims at $4.46. I literally said Hims is fantastic at $4.46. You wanna sell puts, you wanna do covered calls, very friendly for a small portfolio. And I ended up being completely right. People have made a lot of money, but now at $5.93, I mean, I just don't know. I really don't feel as confident with Hims at $5.93. What I would do is I would either sell $5 put options, or I would just kind of wait and hang out and hope that Hims falls for a better entry price, because I wouldn't really jump in at $6 per share. I think this company could be a $10 stock, but that could take a couple years. So I'd like to buy it at $5 per share. Let's see, what else do we have? Snow is usually overvalued, so I have it on my watch list because I specifically like to sell call credit spreads. Same thing with Net. Now, BABA has been really stable. I can actually see an iron condor strategy working out on BABA. BABA very, very well. The implied volatility is high, so doing iron condors and selling them can bring in a lot of premium. So I would be a fan of doing iron condors on BABA, and I would probably go for, let's actually put it into Yahoo Finance, see what strike prices that I would pick. I'm going to show you actually how I end up picking strike prices to begin with. So what I do is I use Yahoo Finance, right? It's a free tool, love it. I go to chart, and then for chart, I'm going to go to 6-month chart, and then I'm going to go to indicators, and then my favorite one is Bollinger Band, especially for iron condors. 20 period is fine, 2 standard deviations is fine. If I click save, you'll see right here that BABA is actually near the end or the bottom of its Bollinger Band. So for me, I'd be really comfortable selling 95 and 90 put credit spread, and I'll also be comfortable doing a 95-90 iron condor, with the top of the iron condor being actually around this 120 area, 120, 125. I'd easily do that on a weekly basis, and you can probably bring in, let's actually see how much money you can bring in. Let's see the specific trade. So if I go to BABA, let's see how much money you can make on BABA by doing iron condors on a weekly basis. By the way, the Bollinger Band that I did is 20 days out, so it's going to be much safer than even needed. Let's actually go for not 1 week, let's go for 2 weeks, because my Bollinger Band is 20 days anyways, so this would be more than fine. So let's say I sell the 95 put option, right, opening up at iron condor, and I end up buying the put option at 90, right? So see how it makes me have a max loss of 9,200. That's too much. But when I do a put credit spread now, when I buy 90, I can only lose 375. I mean, it's amazing. I'm making 125. I can only lose 375. By the way, this is going to become a lot better once I open up the call side of things for the iron condor. But you check it out, $125, risking 375. Not bad for this stock having to fall down to 95, which is unlikely given the Bollinger Band. But anyways, really high return. So now what I'm going to do is now I'm going to go to call option, right? I'm going to go sell call option. I'm going to jump up all the way to like 120 just to be really, really safe. So super safe on the upside. By the way, you don't have to go as safe. You can go even like, you know, let's see, 118 is, honestly, 118 would be fine as well. So 118, and now I'm going to sell the 123, right? Because I want it to be $500 in difference. Oops, that's double sell, so I need to go buy. So 123 buy. Okay, so the total credit is $146, or actually $156, and my max loss is $344. So it became a little bit better, right? It became better by about $25. So now, as you can see, this iron condor, as long as BABA stays within, you know, $93.44 above that, and then below 119.56, you're going to end up making about $156. So very high return for just 2 weeks. I mean, this is literally a 40% return. So very big fan of Alibaba and doing the iron condor strategy on BABA. Now looking down, let's see, Chipotle is a company that I really love. Snapchat I've avoided, and Pins I have avoided, and I'm very happy about that because people that were invested in these stocks have lost basically their entire shirts and tons of money, and I've helped investors save a lot of money. And sometimes saving money is just as important as making money. In fact, I'd argue that preserving your wealth is more important than making more money. So Oatly, good. Tattooed Chef I have on my watch list, but I'm not in right now, and very happy I'm not in because I've warned a lot of investors that I want this company to fall down before I'm ready to buy it. I know there is another person recommending this, and there's actually a few people recommending Tattooed Chef, but for me, I've pretty much avoided it. And over the past 3 months, I know that it's had some rough waters. Yeah, 26% down. So I've avoided this company, but I like it in some ways, but I'm just not ready to invest in it. Now, let's see what else I would recommend. Airbnb, awesome. Like one of my favorites right now because it's trading so well on the OptionsFi software, which also has a Discord community. And then Palantir, big fan of it. We've made really good money, and I'm probably going to keep selling some put options today on Palantir. I'm just not sure on what strike yet, but you can join the coaching at 10:30 a.m. Eastern, which is my regular time. Or if you're not in it, just hit that first link in the description and just schedule a call with me or someone on my team, and we can help you get in so you can watch me trade. But for Palantir, I'm probably going to sell a put. I'm just not sure on the strike just yet. I want to see what the market does when it opens. And yeah, that's pretty much it. I'll wrap it up there. That's kind of my plan. And my other plan is to avoid the crypto stocks right here. I don't like any of these stocks, but I like to watch them because it's fun. But anyways, hope you enjoyed this video. Thanks for watching, and I'll see you in the next one.